Good afternoon.
Good afternoon.
Oh man, time to have some fun. So Mike brought me on to be an executive in residence, and I can't tell you how many people ask me, what does that mean? Well, Mike doesn't really know what that means either, neither do I, but we spent the last few months really crafting what we think could be really exciting, and it's, in my mind, it's bringing industry to the students. So much of what has made me successful, made our panelists successful, has not just been academic theory, but it's been stuff that we've learned in the field, in real practice. And for years, decades, longer than I've been around, that's how most people got into the industry, became successful, but it was almost a little kept secret. And over the past couple decades, I've been really thrilled that there have been so many schools that have brought on real estate, but as a function of that, I've also tried to include experiential learning in the process, but not everyone gets it right. I think we've come up with a really good formula here at Notre Dame, a really good base. And today's discussion is really going to be building on that and really talking about experiential learning. So thanks everyone for sticking around. I see some of the room cleared out, so I gotta fire the room up a little bit, but I'm excited to cover this topic today. So my name's Dwight, as you heard earlier. I have the pleasure of moderating today's panel. We've got three remarkable panelists that bring a wealth of knowledge and experience both professionally as well as academically in regards to real estate. So we'll start today's discussion by delving into the concept of experiential learning. So this experiential learning is really the cornerstone of the FIRE program here at Notre Dame, and it's what makes our curriculum so unique and valuable for students. So Rick, you get the first question.
Right.
So you've been teaching here at Notre Dame for several years, covering a class called Real Estate Investment Trusts. What got you motivated to start teaching, and how have you integrated real-world experience into your classroom?
Sure. First of all, thank you for having me today. I think first and foremost, I like to talk about real estate. I like to talk about REITs. So my family and friends know more about REITs than sort of anybody in the world should. So, but then more than that, when I think of, being in real estate for 3 decades, you start to think about giving back. And I think one of the best ways, the most productive ways to give back is through teaching. So I was very fortunate in that my son was going to Notre Dame and was part of the first FIRE class. So he started, that was 6-7 years ago. And so I got the opportunity to meet Dan, Gino, and we started talking about, the practitioner's role in the classroom. And how can, you sort of access that? Because it's pretty unique when you look around at other universities, to be able to have that real world look as the students get, upperclassmen, as they get into grad school. So we talked about doing a REIT class. And the REIT class is pretty interesting. I think it was mentioned before, I think Kathleen mentioned that when you look at REITs globally, they're not that big of the footprint of private real estate. They're 5 to 15%. But they do a lot of capital markets activity. Because they have to pay out most of their income as a dividend, they're accessing the equity capital markets, the debt capital markets. And that means that if you want to be an investment banker in REITs, you really better understand, an investment banker for real estate, you better understand the REIT market. It means that if you want to do private equity in real estate, you should really understand the REIT market because they're doing a lot of the buying and selling on the margin. And then it also means if you want to get into asset management, the buy side, the listed side, securities, whether it's the big asset managers like Fidelity, T. Rowe Price, PGIM, they all have REIT groups. And then beyond that, if you want to get into the hedge fund world, they all have REIT pods. So I think this small area sort of really touches upon a lot of different jobs that cut across real estate in many different ways. So, and then to do it at Notre Dame was, really exciting for me just because the culture, the energy of the campus, the students are so prepared. So it's really a pleasure to come in, every week when I come in. I fly out from New Jersey and come here because these students are so good and it's such a rewarding experience for me and hopefully for them.
That's great. One follow-on question there. So can you share an example of how you've connected classroom theory to practical hands-on experience for your students?
Yeah, sure. So there's 2 things I'll say. I know you asked for one, but So one thing that we do, which is really the cornerstone of the class, is that we have the students pick a REIT, a publicly traded REIT, at the beginning of the year, and they have to cover that REIT as a group and make a buy or sell recommendation at the end of the class. So they have to go through a bunch of different sort of categories to evaluate this REIT. They look at valuation, so real estate net asset value, what is the REIT sort of worth on a real estate basis. They look at price to cash flow multiples versus peer groups, and they compare that to growth rate. But importantly, they also look at things like the management team. Can the management team allocate capital appropriately to sort of grow the business, to grow the company as an ongoing concern? Corporate governance. We look through proxies of these listed companies and look at how does the management team get paid? What are their incentives? Are they aligned with you as a shareholder? Really important as an investor to have that alignment of interest. Then we look at things like overhead, debt. We do spend a lot of time on the balance sheet of these companies, and they present it at the end of the year like an investment committee. So I think that's a great real world example for them. The other thing that we do, I think that's very unique, is we do a property tour. So we're fortunate enough that Kite Realty, and I know Tom, I'm not going to take much of Tom's thunder, I know he's speaking after this, but Kite Realty is a listed REIT that owns Eddy Commons. So we have either Heath or Tom come into the class, students do a property tour of Eddy Commons, and it's a great case study because it's got a lot of different property types. It's got apartments, it's got retail, it's got office, it's got hotel, it's got parking. So they really get a real world view of how does a REIT sort of integrate with the community. They had to deal with South Bend, with Notre Dame on a ground lease, very complicated deal. And so for all of that, to get all of that done in sort of a public market listed company versus a private company structure is a little bit harder to do. So it's a great case study. The kids love doing that. They get that real world tangible experience right at the doorstep of Notre Dame, which is fantastic.
Sure. Thanks. Kevin, so your career spans both brokerage and the principal sides of real estate. And now you're sharing your experience with students. What has been your approach to bringing practical real-world insights into the classroom?
Sure, Dwight, thank you. And thank you all for being here today. A couple people I want to thank. First is my wife, Kim, who's sitting right over here. Say hi, Kim. Who could probably answer this question at least as well as I could when you talk about being the spouse of a broker versus being a spouse of an employee as a principal. We'll get into that in just a second. Dan, who's now left me, but thank you for getting me involved in all this, along with Mike O'Malley, thank you very much. And Bruce Lohman, I think he's in the back, who's co-teaching the class with me, the colloquium. And the students that are here from that class, where are you? They've already heard me one day's worth of stories, except for 5 of you that were in College Station. Thank you for your efforts too. Wow, so being a broker, when you're a broker and you lose a deal, you feel it. That day, there's no cash coming into your account. When you're a principal, you're a portfolio person, you've got a bunch of properties, you lose a deal, you'll get the next one. You still have a paycheck, you still have a 401k, you still have your benefits. As a broker, you feel it. So what does that do? You want to find out why you lost that deal, right? You lose a deal, why? You don't want to lose the next deal. There's not many coming around, right? You want the next deal. Was it you selling wrong? Is something wrong with the property? You have an industrial building? Is it in the wrong part of town? Not enough clear height? Not enough dock doors? What were the shortcomings? Was it the price? You learn really, really fast about the properties that are out there and the tenants, what they want and what they don't want. So tenants hasn't been talked about. We've got a real estate book that I use, and it's a great book called The Real Estate Game. It hardly mentions the tenant at all. Everything in commercial real estate is about the tenant. Everything. It's about the reliability of cash flows. Cash flows at all, right? Yep. No tenant, no cash. Do you know what the tenants want? You learn that really, really fast as a broker because your livelihood, your food on the table, your kids' college educations rely on that, right? So as a principal, if you learn why you're losing deals, you know what you want to buy. You know how to evaluate a portfolio. You know how to value the portfolio. So, two different sides of the same game. Brokers are very linear. They're about the transaction. When you're a principal, you have a much broader view. Portfolio construction, you're looking at term, you're looking at all the different things that go into being an owner and a principal and what those tenants really mean. So that's what I try to bring to the kids.
That's great. I'll do a little caveat though. So I was a broker that had to eat what I killed, but then I also was a broker that worked for a brokerage team, and I did have a 401k and benefits, and I learned a lot before getting thrown into the fire. So it's not absolute in that regard. There are places where you could still train. Shout out JLL. I'm a JLL alum. But yes, the eat what you kill does make you really sharpen your game. I 100% agree with you there. So both of you have highlighted how essential it is to bridge the gap between academic theory and practical application in the real world. This is precisely what makes the curriculum stand out. It equips the students with knowledge and the skills that are immediately applicable in professional settings day one. So now let's shift to the student perspective. Keara, you've been deeply involved in the FIRE program, and your experience spans several internships. I'm sure the students in the audience are eager to hear about your journey. So can you describe how the experiential learning components of your courses prepared you for these internships?
Yeah, I would definitely say that all of the courses I've taken at Notre Dame this far have really prepared me for my internship experiences. Like it has been mentioned, a lot of the professors in the Fitzgerald Institute of Real Estate have industry experience, and they really do bring that into the classroom. And that's something that's been really special during my time at Notre Dame. I would say a class that has experiential learning that really stands out to me is Professor O'Malley's private equity course. I had the opportunity to take the class in London while I was studying abroad in the spring, and it was a great opportunity to gain a more global perspective of real estate. We got to meet with a lot of industry leaders in London and even tour assets and physically see the real estate in the city, which was very cool. So that, along with a semester-long project where we were able to create our own private equity teams and funds and present them to the investment committee made up of our classmates, provided me with a lot of skills that were essential in my internship this summer, using real estate databases like CoStar, analyzing sales data, and also just valuing properties using Excel, were all things that I gained experience in the classroom that I definitely applied when I was given tasks this summer.
That's great. So sticking with you, Keara, mentorship is often a critical component of professional growth. How has mentorship, either through your professors or through the FIRE program, influenced your career path so far?
Yeah, that's a great question. I really do feel like mentorship is at the core of Notre Dame, and specifically the Fitzgerald Institute of Real Estate. It's what really sets us apart from other institutes and groups is that everyone is really willing to help each other. And I've personally been able to experience that a lot through professors, alumni, upperclassmen, really anyone that I've ever asked for help. In particular, Alex Taylor, I think, who's here today, stands out to me because he's an analyst at Eastdil Secured now. But when I was a freshman, he was a junior leading the Eastdil Secured SIBC project. And I knew I was interested in commercial real estate, but I didn't have much experience. And I wanted to get involved in more extracurriculars. So even though I didn't have much value to add to the team at the time, he took me in and kind of explained all the components of the project that I didn't understand. And that continued when I led the project, and he helped me get through more of the technical components of it. And the mentor-mentee relationship continued this summer when I interned at Eastdil. So I think that's just something that's really special and important to highlight, is that the mentorship relationships created at Notre Dame, they don't end after you ask a question or you ask for advice. They're relationships that are built and indefinite, and they really continue over time. So that's something that I'm super grateful for Alex and for all my other mentors for, and I hope I can fill that role for someone else while I'm here.
Thanks. So Keara's experience really underscores the power of experiential learning, how it not only prepares students for the real world, but also helps them excel when they get there. So it's encouraging to see, really to hear how well the FIRE program equips our students for success. All right. So let's broaden the discussion now to cover some industry insights and trends. With the knowledge and experience our panelists bring, I'm sure we can uncover some valuable perspectives on where the industry is headed. Rick, you first. The REIT market is often seen as a leading indicator for real estate trends. Given the current economic climate, what unique insights can you share with us about where the REIT market is headed?
Sure. Yeah, I think it can be a leading indicator, but not always. So sort of like economists that predict like 12 out of the next 5 recessions, when REITs are trading at a discount to their private real estate market value, it doesn't necessarily mean that real estate pricing is going to go down. I think where they've been a good indicator, and I think of sort of what's to come on private real estate, is when you look at the footprint of listed real estate right now, meaning the property types. Right now you've got between data centers, healthcare, specialty housing, that's about 30% of the footprint. Much different than the Odyssey, which is the private real estate index. That has 20% office still. So Kathleen talked about this a little bit, where she's really ahead of the game in Blackstone, their portfolio. They've already positioned where they're 2% office, they have data center exposure, specialty housing, et cetera. REIT markets have been there, they're already there. Office is 3% of the REIT market. So I think that's a really sort of telling takeaway going forward of where the private real estate market is going. So if you're starting out, looking at those non-core property types is going to be really important as we move down the next 5 or 10 years. So what is the REIT market saying today? I'm going to go back to 2022. REITs were down 22%. And what do you think private real estate did? And let's go back to 2022. That was when Russia invaded Ukraine. We got into this very inflationary cycle, and we had unprecedented central bank rate increases. So REITs were down 22%. Does anybody want to guess what private real estate was up that year? Some of you, I know some of you, but I'll tell you. So 12%, right? So it didn't really make sense in terms of what was going on with the cost of capital going up so much. A lot of geopolitical risk out in the markets. And REITs react immediately. It's real time. They're listed. They trade every day, so they sold off. So as we rolled forward, that was a really good forward indicator, right? Because we did see in 23 and part of 24 write-downs in private real estate. And the REIT market forward-looking has caught up. It was up 15% last year, up about 15% this year. Still a gap, but a much more manageable gap. So as we look at the world today and look at REITs relative to the general equity markets in particular, so if we go back to 2022 and look at what technology did, the Magnificent Seven, how much do you think they're up since Russia invaded Ukraine? I don't know, but it's like 7-fold or something. It's crazy. It's a really dramatic amount. And that means that the gap between technology multiples, so the price that you pay per earnings for technology versus real estate, is the widest it's ever been. We've never seen this before, even in .com. So that creates a good reversion opportunity for investors to go into REITs right now. And all we needed was a catalyst, a tipping point. And we saw that. Very recently in June, when we started to get the all clear that rates are going to go down, inflation is being tempered, we've seen REITs outperform, starting in June, outperform tech and the broader equity market by 1,200 basis points or so. So I would say we're really at a good point, and sort of like a flexion point where we can see the bottom in terms of where private real estate prices are. Cost of capital going down, capital markets opening up, REITs are issuing debt capital, they've issued equity capital. the time is now is sort of a mantra that we've heard from a lot of the private real estate companies. Why wait? You're not going to find the perfect opportunity. So we're seeing things get active. And that's really good for REITs because a lot of them are trading at discounts to private real estate values, and that means there's going to be M&A activity. Kathleen mentioned they did 3 this year. We expect there to be a lot more privatizations this year as REITs trade at, some REITs are still trading at 10 to 20% discounts to private value. So I think great opportunity there. And then, within sectors, we look at defensive demand because the caveat right now, the issue or overhang is economic growth. We're slowing. Are we going to be in a soft landing or recession? Well, you can position defensively within REITs by looking at defensive demand sectors, healthcare, assisted living, right? People are going to go to assisted living facilities whether we have a recession, a hard landing, whatever, because the population is aging, the demographics. People are, into their 80s, and that's medically necessary admits to that business. So that's a defensive way to play. And I think data center is a defensive way too, in that, there's just so much secular growth on the cloud side, on AI, all the usage of, streaming. So that's another defensive way to play it with limited supply because of the power constraints and the approval constraints and the access to debt capital for data centers. So I think all of this sort of bodes really well for the industry. We haven't seen this type of setup in a long time.
Thank you. So that's extremely helpful. Does any of that translate to real estate hard asset investments that in terms of your REIT crystal ball sort of guide you to?
Yeah, I think, the areas that I touched on, I think are also, going to be attractive on the private real estate side, and they have been, whether it's assisted living, data centers, specialty housing. So whether it's single family rental, we see the rent to own equation, being very attractive for renters versus ownership due to where interest rates are, and transaction volume on the single family housing side is so low that it's really creating these bidding wars for single family homes, and people have to rent, and they might want to rent a house because they have access to the school systems that they want to have access to, and the only way to do that at a price point that's comfortable for them is to rent. So I think there's a lot of crossover right now between public and private. And for us, we can be tactical. So we made a lot of money for our investors by investing in office this year. Sounds crazy, right? But we're able to go in and buy office today and sell it next week, and it could be up 10%. I wouldn't recommend doing that on the private side, probably. Maybe not right now if it was the right asset, yes. But you can be very tactical. Whereas if you have a $200 million private office piece of real estate, you can't really be tactical with that, right? So we've been able to add value that way. That's one of the advantages of the REIT market. You can take advantage of those tactical opportunities too.
Sure. Kevin, logistics and industrial real estate have been hot topics, especially in the Midwest and Mid-South regions. What trends are you seeing in these sectors, and how might they shape the future of real estate in these areas?
Great question. I've spent a lot of the last 18 years in the Midwest and Mid-South in the industrial space. When we started Exeter, my wife and I and our 3 children moved to Louisville, Kentucky, right in the heart of the Mid-South. And so I'm going to ask my students, or anybody else who wants to jump in, because our first class I asked this question. In the world of logistics, why is Louisville, Kentucky important? Come on, guys. Anybody? UPS. Excellent. Thank you. Somebody was paying attention.
Who said that? Raise your hand. I want to make sure you get credit. That's a great answer.
UPS, United Parcel Service, the 11th largest airline in the world, is headquartered, has their airline in Louisville, Kentucky. Their headquarters is in Atlanta. Their airline is in Louisville. When the season's up and running, 455,000 packages an hour get processed through their hub. We take our investors through that facility when we have our annual meeting in Louisville, and it is a very cool tour. If you ever get a chance, do it. Federal Express is headquartered where? Class? Memphis. Where is their second largest hub? Indianapolis. Amazon, where are they building their airline and their distribution center? Where was DHL's heavyweight facility? Delaware, Ohio, right outside of Cincinnati. You draw a little triangle between those three spots, Indianapolis, Louisville, and call it Cincinnati, you get the distribution point for goods and services that travel by air. Starting in 2007, 2008, the Midwest and Mid-South was, from a big picture perspective, not getting a lot of love from the REITs or a lot of the institutional owners of real estate. They wanted to go to the smile states. California, the coasts, the South. They didn't want anything to do with the Midwest or the Mid-South. This thing called the internet came along and turned that all upside down. We were embedded in the Midwest and Mid-South, in Memphis, Nashville, Louisville, Indianapolis, Cincinnati, Columbus, and took advantage of all the dispositions that took place in those markets by those companies, and we became the largest industrial landlords in those cities. Distribution from Columbus, Ohio. If you get an Amazon package, 60% chance it comes from Columbus, Ohio, regardless of where you are in the country. Because 60% of the US population can be reached from Columbus, Ohio, one-day truck drive. So the Midwest and Mid-South has redefined logistics for the country. California's got its own thing. There's an inland empire out there. In Texas, there's a lot of population, and there's a lot of other places where people live that need products distributed to, where we have offices. There's thriving markets. But what drives the bulk of the goods, at least from my perspective, because I'm kind of a homeboy in the Midwest and Mid-South, logistics is alive and well and will continue to be. The world of logistics is changing all the time. It's morphing, it's changing. Trucks went from 40 feet to 50 feet to 55 feet long. Truck courts got bigger and bigger. Trailer parking became more and more important. Clear heights went from 28 feet to 30 feet, 32 feet, 36, and now 40 feet. There's a lot of obsolete product out there. So developers, as markets recover, and tenants feel bullish about the world at large, I think it's a good bet. That's just me.
That's great. So sticking with you, Kevin, what should students interested in these sectors be aware of as they prepare to enter the industry? Now, I suspect a lot of it you've covered already in your answer just now, but anything with someone just getting into the industry to keep in mind or be aware of, just based on what's going on?
Yeah, no, and you know, I've talked to a bunch of the students, and there's a lot of finance majors with a real estate minor, right? So a lot of the finance majors, they want to get a real estate job, they go straight into a job being an analyst someplace. So you get portfolios dumped on your desk, run the numbers, right?
Yep.
Dig into the numbers. One of the biggest things is the vacancies, right? The vacant spaces. The tenants that are in place that have defined cash flows, in the industrial world, it's easy. They're triple net leases, which means the tenants pay for all the expenses. So it's just about the income, right? Vacancies. What are the assumptions? If an analyst was really, really thinking, they would dig deep into the vacant spaces. Who was the previous tenant? Why did they vacate? Right?
Yep.
You may find if a vacant space is sitting vacant and it was, let's just say, a 3PL called XPO. Did they like the space? Did they outgrow it? Did they lose a client? Who was the client? Why was that important? Well, the client was Continental Tire and it was full of tires. May sound a little silly, but the building may smell funny. You think Cardinal Health or any of the big consumer products companies or Levi's wants to go into an old tire building? Probably not. Should you throw that building out of the portfolio? Tell your investment officer when he goes to committee, I want to throw out these 2 or 3 buildings because they're broken or they're going to be difficult to lease. That would make you a hero to that investment officer. You want to be valuable to the investment officer. As Kathleen said, What do the asset managers think? What do the property managers think? Who talk to the people on the ground? What's really going on there? So how can they be beneficial? How can they learn? Find out about the tenants. What do the tenants want? What are they doing?
Yep.
So.
Yeah, that you bring up an interesting point. When I first got into the industry, I was doing something that wasn't sort of my end game. I started off in construction, and I did a stint in property management. Nothing wrong with either of those disciplines. It just wasn't aligned completely with where I wanted to go. But rather than sort of be frustrated and kind of can't wait till I get to the next stage, the one thing I loved about the industry is that the disciplines are so interconnected. Like what I learned about being a laborer was useful. What I learned about estimating on a construction site, that was useful. On the property management side, I was an assistant general manager on a 1.2 million square foot building in downtown Miami that had been around since the 80s. And one thing they had was a ton of leases. And you could see the differences through the different changes in ownership over years. So rather than just be frustrated I was there because I really wanted a job in capital markets, I said, I'm going to sleep in this office. I'm going to learn, I'm going to be able to command what happened here at this building and then leverage that when I'm going to go interview, but also leverage it for myself. Because one thing that, everything kind of, you're able to leverage it. So I really appreciate you bringing that up. So these insights offer a valuable snapshot of key trends shaping specific sectors in the real estate market. While we've touched on a few areas, it's clear staying informed and adaptable in this ever-evolving industry is crucial. This kind of specialized knowledge is what gives our students a competitive edge as they prepare for their careers. All right. So as we near the end of our panel, I'd like to focus on both students and professionals on how they can maximize their opportunities available through FIRE. So starting with you, Keara, what advice would you give to your fellow students on how to fully engage with the resources and experiences available through FIRE?
Yeah, I would just tell every student to just take full advantage of all the opportunities and resources that FIRE presents us with. It seriously is a great institute that allows us many opportunities. It's important to just do everything you can and say yes when you can and don't be afraid. Join the real estate club. There's lots of career tracks, networking opportunities, case competitions. Get coffee with your professors, get to know them. They're there to help you. And just really, even if you're afraid to do something, trust that everyone around you will really help you through it. I know there's been countless times during my time at Notre Dame where I've been presented with opportunities that maybe at the time I didn't feel qualified enough to accept, or I didn't know if I had the time to do so. And every time I said yes, it ended up being a great learning experience. I just learned to ask for help, and that's okay because everyone here really wants you to succeed. So yeah, I would just take advantage of everything.
Great. All right, follow-on question. What has been the most impactful experience for you, and how can other students take full advantage of a similar opportunity?
Yeah, I would definitely say joining the real estate club was one of the greatest opportunities for me here at Notre Dame. It's grown so much over the past several years, and this year under the guidance of Ronan and Kathleen and all the other VPs, there's lots of opportunities to get connected with alum and mentors, so that's a really great opportunity. Also doing SIBC projects, case competitions, anything that will help you gain that real world experience and prepare you for internships. It's great.
That's great. So I'm going to ask the same question to Kevin and Rick. Kevin first. How can professionals in the room engage with and support FIRE, the program, to help foster the next generation of real estate leaders?
I think to make yourselves available and to show the students that these terms that everybody throws around, like asset management or portfolio management or what is private equity. I'm always amazed how many definitions there are for each one of these terms that we all throw around. Like everybody thinks it means the same thing. You know, Exeter, EQT Exeter, we were a private equity company. But first we're a real estate company. We are an operator. We self-perform our own leasing, management, development. learn, or the professionals out there, make yourself available to the students to show them that there are so many different ways to not only define these terms, but ways that you can make a career in real estate. Kathleen said it. She wished she had learned kind of like day to day and was more in the moment, seeing all the things that were taking place. And as professionals out there, we can show the students that, I think, when we talk to them and make ourselves available to them to have those discussions.
That's great. Thank you. Rick, same question.
Yeah, I think Kevin covered sort of the practitioner side and the fire member side pretty well. I would just add, maybe on the student side, look at networking not as transactional. And I think Kathleen was making this point that it's relationship building, right? So, to sort of reach out when there's a job opportunity at a firm is probably maybe a little bit late in the game. You should, sort of access people that you can through the fire program a little bit earlier. And I think that's always sort of a good advice for somebody. Beyond that, I would say take advantage of the trips that fire does. They do a New York visit. I think they do LA. But that's a great way to go see practitioners that are out there who are willing to help. They're accessible at that time. And then lastly, I would say right now you've got, I think, 2 years of actual fire graduates out in the real world. And they're you in the future. They're you 2 years from now, 3 years from now. That's one of the best resources I think that you can access because they can tell you exactly the path they took. They're out in the industry working right now.
Great. All right, either of you can answer this one, Kevin or Rick. So what are the benefits for professionals in getting involved with experiential education programs like FIRE? Similar but slightly different question.
So the benefits
to the professionals.
Yeah, so I think to the professionals, look, it's all about talent, real estate, right? It's about tenants, but it's also about talent within the industry, right? So I think having a pipeline and access to such a talented group of students that you have here, I do know we have students at PGIM that have gone through the FIRE program. And they are some of the best performing analysts out of our whole organization, and we hire lots and lots of analysts. And the feedback is consistently that always very prepared, very collaborative, very polished. So they check all of the boxes, I think, that as an employer you would be looking for. So be engaged, recruit here. I think there's just unlimited potential that these students have that you're doing yourself a disservice if you don't really tap into it. I know we've taken advantage of it. I don't want to give out the secret and make it really competitive, but it's been a great sort of program for us.
Okay, thank you. So I'm going to bring this portion to a close. 3 things that are really key takeaways for this discussion so far. FIRE does value experiential learning and include that in the education process. Also, the exciting opportunities within the FIRE program, particularly for our students, for them to access, and then the importance of staying informed on industry trends. So I hope you guys found this conversation as enlightening as I have so far. So we've got about, I think, 4 minutes. Is there 1 or 2 questions out there? We kind of ran a little bit over. Actually, Mike told me I had more time, and then he told me I have less time. So, so 1 to 2 questions, anyone? Okay, thank you. That's it.